welcome to another episode of Startup to Scale Up. On today's show, we're putting the spotlight on SahiBandhu. Take a look first. India, with the largest household gold holdings, has a treasure trove that's sitting idle. Enter SahiBandhu, a tech-driven startup making gold loans access easy. It's helping more people monetize the yellow metal, and the results are impressive. In just 5 years, SahiBandhu is nationwide and is enabling the disbursal of 300 crore worth of loans every month. And joining me on the show is none other than the co-founder and CEO himself, Rajesh Shet. Rajesh, thank you so much for taking the time out and speaking to us. Let me start off by asking you to tell us the beginning of SahiBandhu. What prompted you to get into the gold loan space?
Thanks, Avani, for the opportunity. So let me take your question. Yeah, see, gold loan is a product that even from my childhood or family background, there's some connect to the gold loan. But we come from a jewelry business, originally from Goa and migrated to coastal Karnataka, and then most of the family members are from gold loan business. So there was already some connect to this trade, but that was not a profession which I lived. I'm an engineer, and my father and all the brothers, everybody's into tech side or the engineering side of the world. But I've been always associated with something to do with banking, and my entire forte has been to try out newer things, and every few years incubate some business and run it, and then move on to creating something new. That has been my experience, but all has been around banking space. So prior to SahiBandhu, I was taking care of financial inclusion business, which is providing banking to the rural or remotest part of the country, providing the last mile connectivity. And we saw people could not still get loans from the banks because people do not have steady income. They don't meet standard underwriting norms of the banks. So when we were deeply working with rural India, we realized if we have to solve that problem, then we should create or find out a product that can meet their requirement. So gold loan was one of the products that we saw. So we decided that gold loan could be a product that we can introduce. It's something that every citizen has with them. India is the largest gold holding, and that's how SahiBandhu was created. And then we decided that it should be any business, if it is to be scaled up, nature of product requires it to be offline, but at the same time, it has to have a tech platform as underlying theme, that this business has to be a tech-enabled platform. Only then we can provide the best service and to all the stakeholders. That's how SahiBandhu got originated. And then we created this entity.
Right. So in terms of the differentiating factor for SahiBandhu, because it's a gold loan aggregator, so what would be the differentiating factor and the process?
Yeah, so key differentiator that we are bringing is for end customers, we are providing multiple choices, multiple products, and we are keeping the theme that gold loan should be a solution for their financial need. And so we are trying to understand, we are going one step back, which many of the banking partners also have not done. Most of the time, what was happening is you need a gold loan, come to me. That is how everywhere it is advertised in the gold loan segment. But we have tried to do, why are they needing gold loan? So we have tried to understand in the last 2 years, every customer's final end use of this gold loan. Was it being used for business? Was it being used for some family emergency? Was it being used for medical emergency? Was it being used to take care of the educational needs or a travel need? Where is this finally being utilized as an end use? That's where it gave us a lot of insight. So if we try to give it like any other product others are giving, that you need gold loan, then they have already made a lot of informed choices, and then we will be one of them. Why not reach out to them before even gold loan as a choice? That is one key differentiator. And plus for customers, we try to give them multiple choices. Transparency and trust is very, very important. There should not be any hidden charges. So this is our model. And from the consumer angle, they are not paying anything to us. The loan is provided by the bank, they pay to the bank, and their gold is safely kept in the bank. Which bank? We give them multiple choices based on their requirement. That's our key differentiator.
Right. So your revenue comes from the commission from the bank directly to you.
Yeah. So what we get out of the bank is unlike some of the other people who may just provide the lead to the bank, and then the entire sale of the loan as well as fulfillment to be done by the bank. In our case, what we do is we already sell the loan to customer. It is only a fulfillment that is happening at the bank. So for getting the customer as well as doing the pre-sale, so that the customer spends very less time in the bank. So we get a sourcing fee income from the customer. You may call it as commission. We also get a share of interest. We need to get the right mix of portfolio so that there is at an overall portfolio level, there is a interest that in terms of ROI that we maintain, and there are certain incentives linked to overall the interest that we generate for the bank. So we get a income out of these two buckets. And then of course there is a third bucket based on volume that we reach at certain milestones, then we get a added top up to that. These are the three broad categories of our income that is coming from the banks.
So give us a sense of some numbers here in terms of what is the kind of the amount of loans that you give out, some financials if you can throw some light on.
For us, there are two measures. One is number of customers, another is amount of loan that is disbursed. And then between the two, then the revenue, what we earn out of it will come out naturally. So for us, the focus is how large is the market. Almost 2/3 of the market is unorganized, and there is a one-third of the market gold loan is organized. Within organized also about 25-30% is with NBFC, balance is with the bank. And this is a low ticket, low tenure product. So banks will expect mostly to do the walk-ins. They're good at giving the loans at a very competitive rate because they are having a very attractive or a competitive fund-wise. They're well managed compared to NBFCs, where NBFCs are expensive. But then still they can't solve in terms of providing the loan like we provide. So what we do is provide that comfort which the NBFC gives in 10 minutes, giving them through the help of the app that we have, assisted app, where we can take out the details of the customers and then it can give the multiple products to them and then they can choose. And we provide this data in advance, even before the customer goes to the bank. So we are at a run rate of close to 500 crore worth loans per month as of now. And in terms of volume, compared to all our competitors put together, their volume would be somewhere around 500 crore. So totally in an aggregator space, I would put a number very close to about 1,100 crore as the total volume that is happening per month. And we are talking about all the business that is getting through us to the bank. So we are by far the leaders now in the last 6-7 months. Yes, when we started, we were number 2, and then now quickly grown to become a number 1.
Right. And so what kind of margins would you then be working with this kind of the loan amount?
See, I will give you a broad sense. I may not be able to disclose everything, but then I would like to give out as much as possible. So there's a combination of fee income as well as interest income that I told you. So in terms of what we earn, definitely somewhere in the range of between 1.5 to 1.8% is the interest income that we earn from our banking partners. That's where we are. So it's a combination of 2-3 factors I've said. So we work with multiple banks. Overall, at a portfolio level, we are at that range.
And what would be your expansion plans going forward in terms of, even if you require any fundraising, what has that been like as well?
So just to give you some numbers, we've done more than 11,000 crore worth of loans in the last 3 years, out of which 4,000 crore happened only in the last year, that is 22-23. And whatever we did in the entire year, we are already very close to that number in the as of November end. So we're growing almost at 6 to 7 to 8% per month. That's been our growth. And the market is huge. So what we have done is for this product, you can't be only online or you can't be only offline. We try to be the mix of both physical as well as digital. That's what we would call ourselves as a digital player. We have feet on street presence in 500 plus locations with our people, what we call as SahiBandhu officers. And then the online channels also give us a lot of leads, and then we speak to customers and we convert the loans, and then that's what we do. Our expansion plan that's why I wanted to give you a background. So in our view, there are more than 2,000 locations which are high gold loan potential locations we wish to be. We are at about 500 locations. So we wish to cover balance 1,500 locations in next 12 to 18 months. That's our expansion plan. And then in 3 years' time, the monthly run rate that we have, 500 crore disbursement per month, as per the market opportunity, as per our roadmap, this 500 crore will move to 5,000 crore per month. That's the scale that we are looking at. We would like to cover from 500 locations to 2,000 locations, 500 crore per month disbursement to be taken to 5,000 crore per month.
And what would be any thoughts on path to profitability or anything on fundraising at all?
So we are very, very conscious with our background of creating healthy businesses. Finally, you have to be having path towards profitability for sure. That's been our background in terms of whichever business I have created as well as other co-founders. And of course, the major backing is from the Manipal group. So for this venture as of now, so we're very clear we have to grow. So for the growth, you require certain capital, which we will keep in mind. So, but then we have to have a milestone in terms of getting the unit economics right, and we should have a clear milestone when are we going to reach path towards profitability, and then we will definitely require capital for growth. That growth, we are not looking to fund the burn. We would look at a growth capital purely to accelerate the journey that I have said is 500 crore per month to 5,000 crore. If I have a plan of reaching that goal in 3 years, but if I get a funding, whether I can accelerate the growth of reaching to these 2,000 locations I have said. So the growth has to come from the capital that we will be needing, not to necessarily fund the burn. So our aim is somewhere in Q1 of next financial year. Definitely, we are looking at a monthly break-even stage.
Okay. All right.
At a unit economic level, we will reach the monthly break-even definitely from a Q1 of the next financial year.
All right, Rajesh, we leave it there. Thank you so much for joining us and taking us through all of that.
Thank you. Thanks for this opportunity. So stay in touch. Thank you.